Did you know you don't need thousands of dollars to start investing? A lot of people think you need a huge pile of cash to even think about the stock market, but that's just not true. In this video, I'm going to show you exactly how to start investing with just $100 in 2026 and begin growing your wealth over time. This isn't about getting rich overnight. It's about building a solid foundation for your financial future. Welcome to Wealth Logic, the channel where we help you invest smart, grow rich, and retire early. We break down complex financial topics into simple, actionable steps so you can take control of your money. If that sounds good to you, make sure you stick around. So, why start with just $100? It might not seem like a lot, but starting small is one of the most powerful things you can do. First, it builds discipline. Investing is a habit, just like going to the gym. You wouldn't try to lift the heaviest weights on your first day, right? Same with investing. Starting with $100 lets you get comfortable with the process without taking on huge risks. You learn the ropes, understand how the market moves, and build the consistency that is absolutely crucial for long-term success. Think of it as your financial workout plan. And this is where the magic really happens, the power of compound interest. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. Compounding is when your investment earnings start generating their own earnings. Your $100 might only make a few dollars in the first year, but then you'll earn interest on your original $100, asterisk plus asterisk, those few dollars. Over time, this snowballs. That small, consistent investment can grow into a surprisingly large amount. It's the ultimate proof that it's not just about how much money you start with, but how much time you give your money to grow. This is the core of investing with small money, and one of the best beginner investing tips I can give you. Don't underestimate the power of starting early, even if it's with a small amount. Every dollar you invest is a seed you plant for your future self. All right, let's get into the practical steps. Step 1 is to open a brokerage account. This sounds intimidating, but it's actually super simple, and you can do it right from your phone. A brokerage account is just an account that lets you buy and sell investments like stocks and funds. For beginners in the US, I highly recommend platforms like Robinhood, Webull, Fidelity, or M1 Finance. Why these? Because they're designed to be user-friendly, and most importantly, they offer zero or very low commission fees. High fees can eat away at your returns, especially when you're investing with small money, so choosing a low-cost platform is key. When you're signing up, they'll ask for some personal information, similar to opening a bank account. It's a regulated process to protect you. Once your account is approved, you can link your bank account and transfer that first $100. For example, on an app like Fidelity, you'd just hit transfer, select your bank, type in $100, and in a day or two, the money is ready to be invested. It's that easy. My tip here is to explore the interface a bit. Get comfortable with where everything is. Look for platforms that make it easy to find what you're really looking for and do you and overwhelm you with crazy charts and jargon. Now for the fun part. Step 2. Choosing your investments. You've got your $100 in your account. What do you buy? The biggest mistake beginners make is trying to pick the next hot stock they heard about from a friend. This is basically gambling. A much smarter approach, especially with a small amount, is to focus on diversification. That means spreading your money across many different companies and industries, so you're really not putting all your eggs in one basket. So how do you diversify with only $100? Through things like ETFs, which are exchange-traded funds, and index funds. Think of an ETF as a basket of stocks. For example, an S&P 500 ETF holds stocks from the 500 largest companies in the US. By buying just one share of that ETF, you're instantly invested in Apple, Microsoft, Amazon, and hundreds of other companies. This gives you instant diversification. Many platforms also offer fractional shares, which means you can buy a small piece of a share. So if one share of a company you like costs $500, you can still invest your $10 or $20 to own a fraction of it. This is a game changer for beginner investing. You could also look into dividend stocks. These are stocks from established companies that pay out a portion of their profits to shareholders. It's like getting a small, regular cash reward just for owning the stock. My main tip here is simple. Don't pick individual stocks blindly. Start with a broad market ETF or an index fund. It's the safest, most effective way for beginners to get started and see their money grow over the long term. Step 3 is one of the most important for building real wealth. Automate and invest regularly. Investing your first $100 is a great start, but the real power comes from consistency. You don't want this to be a one-time thing. The goal is to make investing a regular habit, and the easiest way to do that is to automate it. Almost every brokerage platform has a feature for recurring investments. You can set it up to automatically transfer and invest a certain amount of money from your bank account every week, every 2 weeks, or every month. It could be as little as $25 a week. By doing this, you're taking the emotion and guesswork out of it. The money is invested automatically, so you don't have to think about it or time the market. This strategy is called dollar cost averaging. Here's how it works. When you invest a fixed amount of money regularly, you automatically buy more shares when the price is low and fewer shares when the price is high. Over time, this can lower your average cost per share and reduce the impact of market volatility. It's a disciplined approach that forces you to buy low, which is exactly what smart investors do. Remember, investing is a marathon, not a sprint. Adopting this long-term mindset and automating your contributions is your secret weapon to building wealth steadily and surely. Okay, on to step 4. Track and adjust. Once you've set up your automated investments, you're not just going to forget about it completely. You need to keep an eye on how your portfolio is doing. Now, this doesn't mean checking your account 5 times a day. That will just drive you crazy and tempt you to make emotional decisions. Instead, check in maybe once a month or once a quarter. There are some great free apps out there that can help you track your net worth and investment growth all in one place. Tools like Personal Capital, now called Empowered Personal Dashboard or Mint, are fantastic for this. You can link all your accounts, your brokerage, your bank accounts, your retirement funds, and get a clear picture of your entire financial situation. Seeing your progress over time is incredibly motivating and helps keep you on track. As your portfolio grows, you might also want to rebalance it once a year. Rebalancing just means adjusting your investments back to their original allocation. For example, if you wanted 80% in stocks and 20% in bonds, and your stocks did really well and now make up 90% of your portfolio, you'd sell some stocks and buy some bonds to get back to that 80-20 split. This helps manage risk and ensures your portfolio stays aligned with your goals. The key takeaway here is patience and consistency will always beat trying to get rich quick. Let your strategy work for you over the long run. Before we wrap up, I want to share a few bonus tips that will make your investing journey even more successful. First, reinvest your dividends. If you've invested in dividend stocks or funds, you'll receive small cash payments. Most brokerage platforms have a feature called DRIP, which stands for Dividend Reinvestment Plan. Turn this on. It will automatically use your dividend payments to buy more shares of the same investment, which then helps your money compound even faster. It's free money earning you more money. Second, and this is a big one, avoid emotional selling. The market will go up and the market will go down. It's normal. When you see your account value drop, your gut reaction might be to panic and sell everything. Don't do it. Selling during a downturn just locks in your losses. Remember, you're in this for the long haul. Market dips are actually opportunities to buy more shares at a discount, thanks to your dollar cost averaging strategy. Stay calm and stick to your plan. And finally, use this first $100 as a learning experience. You're not going to become a millionaire overnight with it, and that's not the point. The point is to get your feet wet, to learn how the process works, and to build the confidence to continue investing for the rest of your life. This is your tuition fee for learning one of the most valuable skills you'll ever have. So there you have, it's a complete guide on how to start investing with just $100 in 2026. It's simple, it's accessible, and it's one of the best decisions you can make for your financial future. If you found this video helpful and you're ready to start your investing journey, do me a huge favor and hit that like button and subscribe to Wealth Logic for more tips on how to invest smart and build wealth. And I want to hear from you. Comment below and let me know, what will your first $100 be invested in? Thanks for watching, and get ready for our next video. Tomorrow, we'll be covering 5 passive income ideas that actually work in 2026. You won't want to miss it. See you then.